Good morning and welcome back to Almus Market Mornings, your daily dose of global financial updates. The theme is risk of sentiment. We are slowly observing a gradual risk of sentiment developing amidst the oncoming data. Rate cut probabilities are getting adjusted slowly but gradually. Of course, amidst all of this, we had a bout of rupee weakness yesterday, but the question is whether this is a temporary blip up. Good morning, JK. Your thoughts on the rupee? We are also seeing a bout of weakness, especially in Chinese yuan. What's your take?
Good morning, Swaraj. Yesterday we indicated emerging risk-off sentiment in the global markets, and of course that also impacted rupee to some extent. And the trigger has come from various factors. Reduced expectations of rate cut starting in March, which stands now at 61% probability versus 85% probability that was seen at the peak. Then we had China that did not cut rates as expected. At the same time, we have underwhelming data from US also, particularly in the manufacturing sector, and more than all, the bond yields that have started to rise strongly. In yesterday's trading, actually, US Treasuries were thoroughly thrashed with yields going up to 13 basis points as far as the 10-year is concerned, and we eventually had all the three, tenors, 2, 10, and 30s, rising almost 10 basis points to close it, near the highs. And these were, actually the one more bout of correction to the big fall that we had seen in the yields. And trigger also came from, Mr. Waller, Christopher Waller of the Fed, who was actually responsible for pushing the yields even further last month after the Fed meeting, because he was saying that we were closer to the rate cuts, and now he actually somewhat changed his stance. He's become less dovish, saying that he would be more inclined to look at the incoming data. That put cold water on the market's expectations. And he said also that the policy path must be carefully calibrated and it should not be rushed, in fact. So there is a bit of, disappointment in the market, although 6 rate cuts are still priced in. Whether it will start in March, that is the big question, possibly not. We also had another important voice from the Davos meeting, where Ms. Gopinath of IMF, she was saying that it's still not a time for rising, rather cutting the interest rates. So she was saying that the rapid interest rate cuts are a bit premature because the battle against inflation is not over. So overall, then we had the disappointing numbers from some of the big names in the US corporate sector that also put pressure on the stocks. So rise in bond yields, the continued Red Sea troubles, also the not so encouraging results from big corporates, and the comments from officials saying that rate cuts are too much priced in. These were responsible for even stocks falling. They fell hard to start with, and then they recovered somewhat later in the day. But but as you see, in Asia, the Japanese market is still rising, and it hit a new 3-decade high today, rising mainly on the back of a weak yen, and also some belief that the Japanese may not be cutting or changing their policy very soon. But contrastingly, Chinese market, which had made a recovery yesterday from the lows of last 5 years, now again gave up all those gains after very, very poor data from the Chinese economy growth rate coming lower at 5.2 versus 5.3 expected. Industrial production was somewhat better, but retail sales fell very big at 7.4% versus 10.1% last month, and 8% was expected. Unemployment rate also inched up. Then the December home sale prices, or rather the home prices, fell at the fastest pace since 2015. So all this is happening even as Chinese are not moving on their rates. Chinese yuan is weak, and the stock market there so weak. So overall, a picture of slight gloomy picture in the asset markets is what we are looking at. Amid these, dollar naturally tends to rise, and it did, because we had the dollar which was kind of oversold till last week. Euro, GBP, and yen, all of them had risen quite substantially, along with the fall in yields, and they have now corrected. Yen more so than other currencies. Of course, euro has fallen through 1.09 and stayed well below it, and GBP also, after not so encouraging unemployment number, particularly on the wages front, is not really showing any signs of strength. Commodity currencies, particularly Canadian dollar and Australian dollar, have also taken a hit based on the weak Chinese economy. Looks like dollar index, which is now around 103.50, is likely to test 104 or slightly higher before we can see some sort of sell-off come in, because market still looks a bit short-term oversold in the dollar. That's what has also impacted gold, which has once again found it difficult to go above 2060. Yes, on the rupee, I wouldn't say rupee did as badly as other emerging currencies, but still it did not manage to hold below 82.90, which was considered as a very strong support. It was broken for a couple of days, but the bounce has been strong. Indian markets also took a hit yesterday, kind of reversing from the new highs that was seen, and there is an expectation that today's opening on the index will be much lower as well, after some of the results from domestic bank. But rupee on its own is still now proving to be in the range of 80 to 90, perhaps they extended to 80 to 80. So the range is slightly extended on the downside, 80 to 80, and 83.30 is very likely to be tested again, particularly if the dollar index goes towards 104. Thank you.
Thank you, JK. And of course, the theme is reduced expectations of a rate cut in March. It's at 61% now. And we have also been seeing some underwhelming data from the US manufacturing sector. But the bond yields have started rising up again, primarily because, interestingly, there was a Fed member who was quite dovish back in December. And he has changed his commentary to more of a data dependent approach. US corporate earnings season wasn't all that great, putting a damp cloth on the equity fire. The exception remains the Japanese equities, which have been hitting new highs. Dollar has been seeing some recovery as the oversold conditions for the dollar moderate. And rupee, we did not manage to trade much below 82.90 for a long period of time, and now we are back trading higher than 83. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.